Small caps outperforming the market after Fed Chair Powell's dovish speech on Friday. The Russell 2000 also besting the S&P over the past month and the entire third quarter, too. So, is this the breakout investors have been waiting for in small caps? Let's bring in Carey Hall from Bank of America. Jill, does this have legs here, or is it just based on hopes of a rate cut sooner than later?
Right. That's the big question investors have been asking. And we had been cautious on small caps for a while, but at least near term, we think the Russell's likely to outperform, at least through September, if we do see likelihood of a Fed cut. And, that's what Powell signaled as a greater likelihood in the speech last week. So the Russell 2000 has been extremely sensitive to interest rate expectations in the Fed over the last year or two. The stocks in the index have a lot of rate sensitivity, a high amount of refinancing risk, lots of leverage. So Fed cuts are good for small caps. So I think, near term, the index is likely to outperform. But beyond September, I think a lot will depend on the earnings backdrop, because that's been the other factor that's held back small caps. Is they've been stuck in this profits recession, and they finally just got out of that in second quarter, but a year later than expected.
But Jill,
so I think
how much does it depend on how much that rate cut, assuming we get it, is needed, right? The Fed keeps saying, well, we're watching the data. We want to see how necessary this is. It seems like the market's perhaps hoping for a rate cut that isn't needed too badly, but maybe just badly enough. What if the data shows, boy, we really need a rate cut here? Will those conditions hurt small caps more, or will the rate cut help them more?
Right. Well, I think the overall macro backdrop is important because, one of the reasons small caps and profits have been stuck in this environment is that we've been in a manufacturing recession much longer than expected. Some of the macro data is going to be in focus if the data is weak and investors think that there's risk of a recession. Not our base case, but weaker macro data would be a negative to small caps. I think the news on tariffs will continue to be important because we haven't seen tariffs impact, pricing, inflation, and, corporate profits as much as perhaps was expected so far. But, this still may take time to flow through, and small caps have much thinner margins than larger stocks. So, earnings season is winding down right now, but once we get into October, we're going to, start another earnings season where, we'll get a better sense on tariffs, on top line trends, which have still been a bit weak for small caps. But as of right now, consensus is expecting a big pickup for profits growth in the second half. So we'll see if revision trends kind of bottom out and stay supportive of that.
Jill, what about the next jobs report? How important is that?
Well, I think that's going to help sort of confirm or refute the market expectation around the September rate cut. Our economists are still expecting that the Fed could remain on hold in September, but, the dovish speech by Powell on Friday obviously raised the risk that we do see that cut in September. So, I think all eyes are now on the jobs report on next Friday for whether that sort of confirms the need for a September cut. And beyond that, then it's a question of how quickly or how much the Fed will cut, since, as you mentioned, each rate cut becomes incrementally positive for small caps and helping mitigate some of the refinancing risk. But, on the other hand, as you mentioned, the economic backdrop, if it deteriorates too much, then it's going to be hard for small caps to really sustainably get out of this profits recession that they've been in for several years now.